Now, let's take a look at the overview of tax and zakat planning. For tax, it can be defined as the compulsory contribution levied by the government and imposed on individuals and businesses as a part of the government revenue to fund the public services. It is include the healthcare services, education, infrastructures, and many other social welfare programs. While for zakat, it can be defined as the fundamental religious obligation in Islam that needs to be made by the Muslim as their spiritual purification. And it is one of the 5 pillars in Islam and mandatory for all Muslims who possess the wealth. And in zakat, the fund collected will be distributed to the eligible beneficiaries, including poor and needy persons. Now, let's take a look at the importance of tax and zakat planning. For tax planning, it is very important for the taxpayer to have the systematic tax planning because it can help them to arrange their financial affairs legally in order to reduce the tax liabilities. Also, it helps them to improve the cash flow as well as increasing the savings and can help the taxpayer to make the informed and wise financial decision. As for zakat planning, it is very important because it can ensure the zakat is calculated accurately and aligned with the Sharia principles. Also, it can help to identify the zakatable asset and fulfilling their religious financial obligation correctly. And also, it can help to avoid the underpayment or overpayment of zakat while promoting greater awareness of wealth purification and social responsibility. Moving on to the legal framework that have in tax and zakat planning, the first one we have the Income Tax Act 1967, where it outlines the assessment, collection and administration of income tax in Malaysia. It was enacted in 1967 and enforced by the Inland Revenue Board of Malaysia. The next legal framework is Real Property Gain Tax RPGT Act 1976, which is it governs the taxation of capital gains related to the sale of real estate. And in this act, it is included the scope of the act, progressive tax rates, and strict administrative rules and the key exemption under this act. As for zakat planning, we have State Islamic Religious Councils (SIRCS), where zakat administration falls under the jurisdiction of the individual State Islamic Religious Council (SIRC), and each state has its own way of governing the collection and the distribution of zakat. Now, let's take a look at the objective of tax and zakat planning. The first one is to legally minimize the tax liabilities, where it is to ensure it comply with the tax laws and regulation. And also, it can help to get rid of the stigma that the government wants to only collect the tax but never really promotes the social welfare of the society. And the next objective will be to minimization of litigation, where people can avoid such legal disputes, audits and friction with the tax authorities, for example, the Inland Revenue Board of Malaysia. As for the zakat objective, it is including the spiritual purification, which is zakat is to purify the wealth of Muslim and to avoid the selfishness. Zakat also teaches the Muslim to cleanse and to grow their wealth, as well as not to be greedy and full of ourselves regarding our wealth. And for social and wealth distribution, zakat helps to bridge the gap between the rich and poor, where it is to ensure that wealth circulates within the community and support the eligible recipients.
For the case analysis, I will be presenting on the individual detail of Mr. Dato Aziz Rahman and his family. Mr. Aziz is 48 years old and lives in Rawang, Selangor with his wife Puan Christina Ali, aged 45, and their 3 children, Aina, Adam and Arik. He worked as a senior Islamic bank executive, which served as the main source of income for the family, while his wife is a freelance Islamic financial consultant, contributing supplementary income. The family has a strong background in Islamic finance and emphasizes financial planning in accordance with Sharia principles. Looking at their income, Aziz earned base salary of 260,000 annually, along with a 36,000 bonus, 30,000 rental allowance, and 9,600 car allowance. His employer also contribute to EPF and SOCSO. Meanwhile, Christina earned income from consulting training session and document reviews, totaling a significant annual amount after deducting business expenses such as rent, transport, and administrative support. They also receive investment income from Islamic Unit Trust, Suku, and RAIS, as well as gold investment holdings. In addition, they benefit from various tax relief including personal relief, child relief, medical insurance, and APF contribution. Their medical related expenses include routine checkups, treatment for influenza, and dental care for their child. In terms of financial discipline, they consistently save ringgit monthly for an emergency fund. Additionally, both Aziz and Christina save ringgit each month for the Haji fund. They allocate ringgit for family vacation, ensuring a balance between long-term goal and family well-being. For the children's future, Aziz saved ringgit per month for each child. Next, I'll be present the calculation of total income for Mr. Aziz and Puan Christina. Starting with Aziz employment income under the section 31A, his base salary with an additional bonus and a car allowance giving a subtotal of 261,600 ringgit. His rental allowance is calculated separate on section 31C. Therefore, his total statutory employment income is 291,600 ringgit. Moving on to Christina business income, she earned from consulting fee, training session, and document review, totaling on 134,000 ringgit after deducted allowable business expenses amounting to 33,300 ringgit. Her total statutory business income is 100,700. In addition, the family received investment income including Islamic Unit Trust, Suku or bond coupon, and Islamic rates distribution. This gives a total investment income of 11,220 ringgit. In conclusion, the total aggregate income for the household is 403,520 ringgit Malaysia.
Next, I will explain on the computation of the tax for the income of Dato' Aziz family. Okay, the first step is for us to calculate the chargeable income. The aggregate income of the family is 403,520 ringgit. And on the screen right now is all the deductibles, which is tax relief claimed by Dato' Aziz and his wife, Mrs. Christina. For the personal relief, both of them was able to claim a 9,000 ringgit relief for each of them because the tax assessment was made separately. And for Mrs. Christina, she was able to claim for the influenza A medical treatment, which is 500 ringgit, and also influenza A vaccination, which is 350 ringgit. While Dato' Aziz claimed for the child relief, which is 6,000 ringgit. The child relief claim is 2,000 ringgit for each of the children that is under the age of 18 years old, and both of them have 3 children that is under the age of 18 years old. For the medical insurance, he claimed a 4,000 ringgit for the relief. Full medical checkup, he claimed a 800 ringgit. For the youngest child dental expense, he also claimed for 180 ringgit. And lastly, for the EPF contribution, he claimed for 4,000 ringgit. The total deductible across the family is 33,830 ringgit, allowing us to calculate the chargeable income, which totaling up to 369,690 ringgit. For step number 2, we will need to refer to the LHDN tax rate category table. So, based on the LHDN tax rate category table, we was able to identify that the chargeable income of the Dato' Aziz family fall into the category of G, which is where the chargeable income range is between 100,001 ringgit and 400,000 ringgit. The calculation is that for the first 100,000 ringgit, for the first 100,000 ringgit, the chargeable income will be imposed a fixed 9,400 ringgit tax, and then we need to add the tax, and then the second part of the tax is that for the balance of the chargeable income will need to be multiplied with 25% tax rates in order for us to get the total amount of the tax that is imposed on this category of chargeable income. Step number 3 is the actual calculation for the gross tax payable. The chargeable income is 369,690 ringgit, and for the tax computation, the tax for the first 100,000 ringgit will be imposed a fixed 9,400 ringgit, and then the tax on the balance will be that the 269,690 ringgit need to be multiplied with 25% tax rate. amounting to RM67,422.50. And then the total gross tax payable will be RM76,822.50. Lastly, for the step number 4, we need to calculate the actual tax owed by the Dato' Aziz family after the rebate, which is zakat. The gross tax payable for the Dato' Aziz family is RM76,822.50. The tax rebate that is eligible for the family is the zakat on income and saving. And then the total zakat rebate eligible for the family is RM9,987.70, allowing us to calculate the actual tax owed by the family, which is RM66,834.80.
Now, I will explain the zakat planning for Dato' Aziz, which covers zakat on income, zakat on saving, and also zakat on gold. First, let's look at zakat on income. Dato' Aziz's total employment income consists of his salary, performance bonus, rental allowance, and also car allowance, giving a total of RM291,600. His wife, Puan Kisina, earns business income from consulting, training season, and document review services. After deducting her business expenses, her net business income is RM100,700. In addition, the family received investment income of RM11,220. Therefore, the total income is RM403,520. Next, we deduct household living of $34,200 and EPF contribution of $4,000 from the total income. This leaves a balance RM365,308. After deducting annual hedge saving of $12,000, the zakatable income becomes RM353,308. To calculate the zakat, we multiply RM353,308 by 2.5%. Therefore, the zakat payable on income is RM8,832.70. Since the amount exceeds the nisab of RM35,499, Dato' Aziz is required to pay income zakat. Now, let's move on to the zakat on saving. Dato' Aziz has total saving of RM46,200, which include his emergency fund, Hajj saving, travel fund, and also children future saving. Since the saving exceed the nisab amount of RM35,499 and have been kept for more than 1 year, zakat is payable. The calculation is RM46,200 multiplied by 2.5%, which gives RM1,155. Lastly, for zakat on gold, Dato' Aziz has investment gold worth RM25,000. The zakat calculation is RM25,000 multiplied by 2.5%, which equal to RM625. However, because the value of the gold is below the nisab of RM25,499, he is not required to pay zakat on the gold investment.
There are several planning strategies that Aziz family can use to reduce their tax burden while remaining compliant with Islamic principles. One key approach is increasing retirement saving through higher EPF contribution and investing in PRS, which not only provide tax relief but also strengthen long-term financial security. In addition, Christina can maximize deduction by claiming all allowance business-related expenses from her consulting work. Other strategies include maximizing SSPN contribution for tax relief up to RM8,000 and increasing family takaful coverage, which allows further tax deduction of up to RM30,000. Malaysia, the family can also improve tax efficiency by timing income and expenses wisely, such as deferring bonuses and accelerating professional development. Cost maintaining Sharia compliant investment ensure that their wealth grow ethically while remaining financial efficient. For zakat planning, monthly contribution can help ease cash flow, and both business income and gold assets must be properly assessed. Importantly, zakat payment in Malaysia are tax deductible, further reducing taxable income. Overall, these strategies support both tax efficiency and long-term financial and spiritual well-being.
As a conclusion, tax and zakat planning are very crucial for Aziz family in order to plan them systematically. By implementing both zakat and tax planning systematically, it can help them to obtain the tax relief while fulfilling their religious obligation in accordance with the Islamic principles. Tax planning related to contribution to the Employees Provident Fund EPF, and also investing in the PRS, and also maximizing SSPN contribution. Maintaining the adequate takaful coverage can provide significant tax saving while strengthening the family's long-term financial security. And for zakat, it can help them to fulfill their religious obligation as well as the responsibilities to the society and to achieve the spiritual benefit related to the wealth purification. According to the case study of AZIZ family, there have several recommendations that can be made. The first one is the retirement focused savings and investment, where they can increase and maximize the EPF voluntary contribution and participating in the PRS scheme, where it can help them to enjoy the tax relief as well as build the sufficient fund for their retirement. The second one is the maximize the available tax relief, where through the SSPN contribution, medical expenses, family takaful premiums, and other allowable expenses can reduce the overall tax liabilities. Third one is adopting the systematic zakat payment strategy, where it includes the monthly zakat contribution or deduction of zakat payment directly from the saving account of the zakat payer, where it can help them to ensure the zakat payer fulfills their obligation without struggle. And by implementing the recommendation above, it can help the AZIZ family to enhance their financial management to be more effective and optimizing the tax having and fulfilling the zakat obligation, as well as achieving the greater financial and spiritual well-being in the future.